Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, so look, we talked yesterday about 3,300, daily mid-band, 9-day, how that was the bull bear. If the bears were going to have any chance of doing anything this week, they had to print stuff with 32s on it. They took them right at the open yesterday. They ripped them to the upside. They haven't looked back. Printed new all-time high at 33.64. And we're 60 handles up off the low of 33.03 and change from Sunday night. So, it goes back to what I said yesterday. You can hate this rally all you want, but you can't short this rally. You have to be long, or you got to get out of the way. If you just can't bring yourself to buy it, you need to get out of the way, because the fact that everybody hates this rally and everybody comes up with very logical reasons as to why we should not go up just means it's going to keep going up. You become the squeeze. Don't be the squeeze. So it was a pretty simple day for us. We bought the open, 17 and change, laddered up 33.25, and then bought 36.75 last night, which I really didn't think was going to turn into what it turned into, but here we are printing 63s. And just when you think they can't, squeeze them to another level, they do. But there's no sense fighting this. So hourly chart, all about 3,300 this week. You see it's stalled there, weekly pivot. Your daily mid-band is scooted up to 03. You got the 9-day at 33.10. But the bottom line is you had some mid-band support. Here was your open. And when they did that, yeah, it's a higher low from here, but I think a lot of people were leaning in on the open, and they didn't get what they wanted. And once that happened, the advanced decline line, the internals weren't strong. I think they finally hit 200 in and around the close, but that was it. And it didn't open up from any great depths. So it opened up negative 200 and change. We ended up plus 200. So, the net was about 400. But it was not your classic AD over 350, AD over 400 trend day. But price-wise, it's as trendy as it can get. Yesterday was as trendy of a trend day as you can have. So we print 64.75. You see the hourly mid-band there, 33.55. You got volume-weighted average price at 59 and change. You've got proprietary moving average in at 60. So that, 55 to 60 area is going to be important. But I'm going to sing you the same song I sang you yesterday. Don't fight this trend. Don't fight this trend. So if the Bears are going to make any headway today, they've got to convert all the way through 55. They have to hold that as resistance, and they have to pull it in. If today's the day to do that, great. There'll be some great shorts. But you can't assume anything. The other thing I told you yesterday was we were not overbought. We were not frothy. We were not extended. All this other stuff that people come up with. We popped. We ground it back for a couple of days, and they took it to a higher high. It's very orderly. There's no panicking. There's no panic buying. There's no panic selling, actually, when they take it down. It's just, you get some big candles, and then it grinds. But, people are, that 33.64.75 up there, that is anything but a blow off top. It's just not. We all know what one looks like, and it doesn't look like that. So, be realistic about what the market is actually doing, not what you want the market to do. Market doesn't care what you want it to do. Doesn't care what you think. Doesn't care what you want, and it certainly doesn't care how you feel. Okay? As long as the Bears have an inability to convert key areas, we will continue to grind higher until it doesn't feel like doing it anymore. So, look, if today's the day it's going to head down, it'll make some lower highs. We'll find a risk marker. We'll be short more than we're long. If it's like yesterday, well, then we're going to head higher. What I'm wondering about today is whether we go ahead and start consolidating again up here. We've taken a 60 handle trip up here. It likes to grind after making all-time highs. You can see this was the last all-time high up at 57.75. We did grind around a little bit, and we kind of ground to the downside. But if that's going to happen, I mean, you see the hourly midband here, right? We started to lose it. We were spending more time below than we spent above. Well, that's 55. Now, that'll continue to rise to meet price, but until we start spending more time below the blue line than above it, the bulls aren't done. Okay. Everybody have a fantastic day. I'll have some more stuff out on social. Come check us out in the room. Come be on the right side of this stuff. We'd love to meet you, love to trade with you. Take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.